Here we are looking at the markets and the 30 best momentum companies on the ASX over the last quarter. We also look at the 30 top launchpad stocks. That's where they show up first before they become those momentum leaders. This is a list that we share with members on a Thursday afternoon. At the same time, Gary Glover gets to go through the list. He's been through the list and he pulls out the lessons and the things to look for, as well as the trading opportunities. This week, we're also going to be looking at some rules of what not to do as momentum traders. And we're looking at some similar themes that we're coming up in both lists, whether they're VCPs, episodic pivots, and then we always want to be looking at the leading themes on the ASX to see if some are boiling up, showing themselves at the surface before they break on out, something that Gary's been looking for many years now. It's a lot to cover. Good morning, Gary. How are you?
Doing good, Chris. Yeah, just realized I had the wrong chart up there, the one with the no moving averages and the coloured volume was different. So I realized I had the wrong chart there. So, but that's a cracking first chart there. Number 4 on the list. Gee, it doesn't get us any better than that from a momentum perspective.
Well, it's a solid chart, and I know it's something that you've looked at before. I think you might have talked about possibly trading it, and maybe it didn't quite give you the setup you needed. And you've also talked about it as being a thematic. So what are we going to learn from it today?
Yeah, that's funny. I just sort of been reading Stan Weinstein's book, last week, and then listening to the audio book Spotify there. But that the sound that's been ringing in my head this week is just that sector strength. So basically, you're looking at different charts, different setups there. Always choose the one that's in the strongest sector. So, really, I mean, we talked about this obviously about relative strength there, which is the key theme for momentum there. But then when you see a sector show relative strength as well, that's a great sign. When we're seeing everything about the last couple of months there, we've seen that relative strength in the sector, the war sector. So military-based sort of stocks, and then we've also seen that energy theme as well. So whether that's uranium and even oil stocks as well. So we've definitely seen momentum in a whole sector there. So sector picking, choosing stocks in the right sector is really important. So I mean, if you look at ELS there, that's obviously the military sector there. I mean, it hasn't even broken the 10-day moving average there. So it's still on fire here at the moment. So, so those ELS has been really strong there. Drone Shield, again, pretty similar there, sort of held the 10 of the day. That's still pretty vertical. I know they're looking pretty extended there. Pretty impressive Drone Shield. Actually, if you zone out there to the weekly, you don't sort of see that often, actually, to see like a growth momentum stock. 270 down to 60 cents there. So that's a fair correction. So, you're looking at,
percentage. It's almost
that's just 30. Yeah, it's just sort of 70-80%. That's the sort of, so to come back there, they don't often stocks that correct that far back. Don't often come back there. I know like Coca-Cola and McDonald's and stuff like that have had a few 70% corrections over time here, but to come back this quick at fast, that's pretty impressive there. So that's had some momentum there. So
I think the solid followers who know this company well will probably put details below, but I think they ended up announcing a contract somewhere in Europe that almost doubled their revenue for the year. So
yeah, that's the EP there, the gap there. So that was a bit of a theme this week here. There was definitely a lot of EPs, a lot of stocks gapping up on good news there. So that obviously that Drone Shield's done amazingly well. EOS, it's probably less actually. I mean, still going from $1.20 to $3, so less impressive, but still very, very impressive. But it has this is one of the few ones actually has broken below the 10. So we did see a bit of, we saw sort of 3 decent sort of selling days down here actually, because even though this is pretty chunky, we did see 3 heavy days down, did basically cut the 10 there. And now we're sort of bouncing back here along the 10 here, maybe just above here. But that's, you stop it like that. I know sort of, Kalamagi would be out on the break of the 10. So breaking below the 10-day moving average, particularly when there's, this had, it barely even touched the decrease as well. So it's so strong there. So, but yeah, pretty impressive there. But that's the first one there that showed a little bit of weakness. I think one of the other sort of high stocks on there was the MTM, which we talked about previously. That also has just, just closed below the 10 there. So that's been pretty strong as well. Had a pretty strong momentum there. So a few of these sort of really, really big movers there. I mean, these things are up about 300% there in a few months, Chris. So, a lot of people complain here that we don't get high momentum shares in Australia there, but we know that's definitely not the case, but maybe we don't get as many, but yeah, we certainly saw it a few there if you look at some of those numbers there. Number 18, I thought was interesting. DTR, sort of one that sort of had that pretty aggressive move, so had your 100% rally there. Has pulled back a bit large, but probably stayed in the top half, and it has sort of starting to tighten up there. So we got a first leg down, second leg down, just starting to tighten up here. So got a bit of a VCP occurring here, still staying in the top half here. So that's not, sometimes they could congest and go again. So that's definitely one to be watching there. Zip, probably a lot of people will be asking about Zip. I know it sort of gets a lot of comments there. So the thing here, and this, what we're seeing this week too, a lot of stocks is we've seen that EP. So we've seen some good news, and those stocks get good news, and then you might see some congestion there. If it doesn't gap up too much, it can sort of gap and run. And if it gaps a bit hard, it might come back. Yeah, come back and undercut. So you often sort of see that gap up and maybe do a little 3-wave undercut and then go. But the thing we know when we get particularly an earnings based upgrade in stocks, and then then you get a jump in the stock, that sort of episodic pivot from earnings. We know usually a few weeks or a month later that stock's usually going to be higher. So I think I mentioned Zip here, even though it's probably undercut that low there. Normally when they get an earnings-based jump here, we know normally in the next few weeks, probably the stock's going to sort of kick on higher. Then that's sort of something we should sort of see. I don't want to jump ahead here, but I know CKF, which is
Collins Food.
I was going to say KSC, but yeah, so it's had that big, so it's a big gap here, pretty aggressive there, and it looks pretty wild and pretty, but we do know that they normally, when they have an earnings based jump, they let me know they're probably gonna, and then climb after that sort of jump. Particularly if it's earnings based rather than just a contract win or something like that. Lithium name's still pretty robust there. Obviously, that's the other sector that's been pretty strong here. Deep Yellow had that little coil, little tightening up, and then it has broke up there. But I think like Bannerman's done that, or they've done the raising there, so they've sort of raised some money here. But yeah, BOE. I mean, Paladin's been the one. Yeah, nice little tight congestion there. Really hugged the 10, which is a pretty good sign. So, gap up, pull back, congest, hold the 10, go higher there. So you can sort of add some back in there if they come back and congest and touch those sort of moving averages, hold it every averages. So, yeah, so it does look quite good there. So they're all pretty strong. Number 25. Bit of a loose VCP, but a VCP nonetheless. And we definitely got some volume there, Chris, as well. Too small for me personally, but stocks had a pretty good run. If you look at that volume here, so pretty juicy rally on some good volume. Bit of a deep pull back, yeah, but then it pulls back, then it rallies again, tightens up, rallies again. This volume here is pretty chunky. So this might have thrown you a little bit the next day coming back. But we saw the volume dry up after that, and then it's popped up again. So this looks okay for a smaller one there. So, yeah, interesting. VTN number 26, bit of a VCP again. So we've had that big rally, 100% gains. We know stocks pull back. So we'll see, first leg down here is pretty deep, and rallies, and then second leg down's a bit shorter again, whole thing tightens up, and then you get a little bit of a B wave, maybe it close above this level or break above here. But yeah, it looks okay volume, but even though it's a bit of a rejection there, but still an up day. So it looks okay for a small one there, but just a little erratic for me. Man, that El Monte, which has been like this a few times there, Chris, it's just sort of just kept ticking there. It's hard to trade this one there. I think that was sort of one that caught my eye in this sort of congestion there back in May. But, yeah, if I can't sort of get a reasonable parcel there, I don't trade it there. I mean, I was looking at his SGLLV the last few days. I thought, well, that looked, this whole thing's called up tight. Looks like a nice cup and handle here. But there's only like 100, 200 shares on the bid and offer. So to try and get a position on, I have to go like through 3 or 4 price layers and stuff there. So just doesn't sort of suit me. That's the unfortunate thing sometimes. You trying to look for liquidity is the other part there. A lot of stocks look pretty good, but then there's not enough liquidity there. That's hard to sort of trade them there. But there's some good setups there. I mean, the key thing there is those sectors, Chris, as well, have been pretty strong here. So making sure we're trading in strong sectors is a great lesson, but also just sort of something that keeps sort of ringing in my ears more and more as we're following these momentum leaders and the ones that have those big moves.
Well, I love hearing that, and I think it was there's a book that you and I were talking about beforehand that we've both read and both got right next to our desks, and it's the same thing that Jesse Livermore was talking about with sister stocks over 100 years ago of trading, and it was Stan Weinstein. We'll put this book on. There we go. Great book. I always love the cover of that. It's one of my favorite covers of any trading books. This book taught me many things, and exactly what you're talking about is if you've got a choice between, and you mentioned it earlier, if you've got a choice in between 2 charts, you choose the chart. If they say they're similar, you choose a chart that's in the strongest sector, and that became that planted the seed for a lot of the research that we've continued for over a decade now of breaking the ASX down into beyond what the GICS introduced in the late 90s, because there's far more information in these companies and there's far more commonalities and correlations and little clusters. Like you've just listed a lot of uranium companies. They don't sit within the same group always, and they can spread across different thematics. So we do know that there's a lot of information and a lot of benefit in monitoring those sectors. And something that you've talked about is you've identified uranium. You said lithium have been showing up. I don't know if the viewers have been noticing this, and maybe they can comment below, but we've been seeing the themes, and for the last, I want to say over a month now, we've been saying uranium, lithium, rare earths. They've consistently been themes that are showing up, and we've seen what rare earths and uranium have done quite recently. Maybe lithium will pop out soon. And then radiology and diagnostic companies, they've also had a decent move. And those 4 themes have consistently been showing up. So that's what I've seen over the last month or so, maybe longer, of themes. We're not always blessed with the theme lighting up the top 30 Launchpad, but is that sort of, are you looking at the market and using that kind of lens of the sector and theme when you're picking your trades, Gary?
Yeah, you got to be careful not to fall in this, because I know, like in the US at the moment, I think healthcare and iTech are like 2 of the strongest sort of their top 5 or 6 themes over there. Yeah, but in Australia, they're definitely not hot here. So so you got to be careful that you do. Yeah, I mean, I do look abroad at different themes over there. Obviously, we've seen energy and uranium pretty buoyant over there, and obviously copper. So the copper ETF got a new high last night. So definitely look at some of those, but just got to make sure the sectors here are sort of strong as well, not over that, because there can be some separation sometimes from that. So I was quite surprised to see healthcare in there. I think our healthcare stocks are all pointing down here at the moment, so they've all traced back here, so not showing strength there yet. So it's just gonna make sure the sector is strong here in Australia as well.
Definitely. It's pretty hard to trade microchips in Australia.
Choice. Yeah. There's not many AI stocks. So it's starting to see a few.
Yeah, but we don't have that same depth and the richness of those who are earning a solid profit and meet the VCP CP criteria. It's just not the same. But we do have a couple of requests in the Launchpad side of things. So when you're looking at the Launchpad this week, and yes, we don't always see a theme that stands out, which charts are showing out to you in the Launchpad?
Yeah, no, I couldn't see a theme. I don't know if you have noticed much themes in there, but I thought it was pretty mixed and stuff in there actually. So, but maybe.
Just looking at the data, so Platinum PGE, I've been trying to scan that every single week, but it's not the easiest one. Most of the stocks on the ASX in that group don't meet my criteria, but that's coming up very highly ranked on the Launchpad. Graphite, similar things. You've mentioned aerospace and defense. That's continuously been there. Medical scanning and radiology and imaging. That's that fourth one that we're talking about. Silver, there's a lot of crossover. So the silver miners also have a foot in other camps. So you know how you often have copper and gold in the same space. And yeah, then we're getting much further down the list. So they're the regular ones that we talked about, but no, I'm not seeing the strongest thematic to chase. So I guess we're into the individual charts and the lessons in them. What's coming out to you as lessons in the Launchpad?
Yeah, well, I mentioned that first one there. Obviously, Collins Food has obviously had that jump up in AP. So I think Hum also had an AP as well. So we had some news and sort of gap up there, and that's sort of, we definitely have seen Zip and email payments. I think Smart Pay. So there's been a few. So that sector is getting some traction there. So so that would have been an EP that you might follow there with Hum as well. So obviously sort of gap up here, had a nice jump there. But because the theme is, the sector's been pretty solid. That was an EP as well. I think QGQ.
As you load that other chart, I know we've had a few members ask about Hum, so it's probably worth looking back in some of the old videos. We'll see if we can dig it up and put it in the comments where Gary's talked about the EPs and the ducks, the swans, and the chickens. So that's worth looking. But so Hum, and what were we looking at next?
Yeah, well, you had a bit of a volume sort of surge there too. So that was probably a bit of a, you had a good, someone obviously, get the heads up early, and then it's gapped up as well here. That you got volume coming in as well. That's obviously a good sign as well. So definitely saw a few EPs there. The QGQ, that's also sort of gapped up out of that low as well on pretty good volume. And there is a bit of a VCP in there as well, Chris, sort of setting up, but still a bit wide here, a bit loose. Don't know, there's sort of something Kalamagi would sort of trade there. Is sort of still part of a downtrend there. That's probably the negative there, but did have a bit of an AP there, so did sort of gap up here, come through there. So just interesting that a few of those sort of definitely seeing a few things sort of gap up there. That was the EPs. I think I should maybe BTI was the other one that sort of gapped up as well. I think PIC was a small one that I noticed. Again, a bit of a BCP setting up there as well, but not that liquid. The volume's not that sort of strong there. Did see Appen, there was a bit of a VCP set up there, but then it sort of undercut the 50, and it didn't break a swing high there, but it did break a B wave break in here. So sort of a stock that I know it's had a pretty big pullback here, but I did like that rally here. It's quite impulsive and pretty strong, and then we've had a bit of a corrective decline there. So kind of stay in the top half here. So I did buy some of that B wave break here. But yeah, haven't got a master position on there just because it might be a bit early here. And if you give yourself a bit of a stop, but this one's pretty, it's got a high sort of ATR too. So when I went, after it broke the B wave and then continued down, I thought about adding to it, but then because I'd have to move my stop into a really dangerous position to add to it. So I thought, no, and we're seeing like a lot of stocks have been flashing back here recently as well. So I didn't add to it just because I'd have to, if you need to lay yourself, enough room to be right for it to sort of get going. And then if I know, so recently I've been trying to scale up a bit too hard, and then they've been whipping back, knocking me out, and then going as well. So, you just got to sort of trade the conditions there. I thought that was interesting there. I mentioned PYC. HMC was sort of one that I did notice as well. I mean, most of the data center stocks, like NextDC, has been pretty robust. DGT as well has been pretty robust as well. So they've all come out of this sort of April low pretty strong there. But HMC's been sort of lagging there. Did have a little bit of a B-wave break there. Not the strongest sort of stock here, but got some okay volume coming out of this. So definitely one to watch there. What else we got there? I've got SKS, look pretty robust as well. That's a bit of a VCP in there, Chris. Did sort of just break through here.
Yep.
The only thing I didn't like about this was the weekly, because when this has had a terrific run here, now we've sort of tipped over. So this is, to me, they can go back and retest the highs here, but that's kind of, to me now we're in sort of more in sideways sort of range there rather than bull range, So, well, they might be able to go back and retest the high up here, but yeah, just that made me a little bit. I'd love to sort of see things still part of the move and not showing too much weakness, or the corrections being uniform, so they're not being bigger than the last correction. When they're the largest correction of the whole move, that when McLaren used to sort of say that can be the sort of tipping point sort of for stocks there. IDX. Yeah, you got a bit of a 0, 1, 2, 3 here, Chris, on the low, high lows, second high low, third high low. So did come out of that quite nice there.
I'll tell you on the 0, 1, 2, 3. I thought we got the 2 and the 3 late April, early May. So I had this shortlisted back then.
Yeah, you could have traded. Yeah, you definitely had another high low, a couple of high lows in here as well. And you prefer to see them nice and tight out as well, because then your sort of stops tighter. But yeah, IDX was interesting. I think the ARB was the same. That's got a bit of a 0, 1, 2, 3 as well about it. A few series of high lows there. Interesting, that one there has really taken quite a lot of time here and held that low here. So, yeah. So that's another pattern there. Even talking about lithium names there, I noticed Liontown, there's a bit messier. Obviously, that's a bit volatile. I prefer to sort of see them a bit more solid, more in a sort of cylinder sort of style. But still got a 0, 1, 2, 3 in here. So has actually sort of kicked up here so far. So yeah, interesting. I think ARB was the last one there. I think I was looking at there. I'm not sure if there's any other one.
There are some requests, and then I wouldn't mind asking you about a common setup that you're seeing, but just the 2 left on the requests for the launch pad with VEE, Victor Echo Echo.
Circle here. Volume here. Okay. Downtrend. Haven't broken a swing high yet. The only positive sign there is that volume the last 3 or 4 days. So I've written the volume up. So there is, they've got that. It's gone to a new low, sold off aggressively into that low. So that can be an exhaustion on the low. And we've seen some good volume come out of this low here. But that's a strong downtrend, Chris. That's exactly, that's not really showing too much relative strength here at this stage. That might be the low, but that's the low there. Look what happens there. That's, there's a July 22 until, July 23, you can be basing for a year. So, this
might deploy the capital somewhere else.
Yeah, that's the thing here. So you'll be trading down quite strong here. You got to be careful just to be buying this sort of anything jumping up here. You want to be sort of starting to sort of see, because look at that there. That's done a nice VCP in there. So if you just, rather than trade all through all this mess here, go up and down, up and down, up and down, and then back down, and then up here again. Wait for the whole thing. The whole thing's congesting here, and then whole tightens up here and comes out here. A bit of a low cheat in here, but then once you basically buying the 52-week high at 68 cents or something. Then we go to $2 there. I mean, that's just straight up from there. So you've avoided that year of carnage there by, that's why we're looking at, again, that sort of Stan Weinstein book talks about
Cycles and phases.
Yeah. So you're, learning your sort of stage 1, 2, 3, and 4, and then waiting for those stocks to basically move beyond the 150-day moving average. So you can see that 50 there. Obviously, if we break above the 50, then it came back and sort of sat on it. But the 150 would be probably sort of sitting somewhere up here, Chris. So it really wasn't till it really came through later on. So that's why using those sort of longer term moving averages there as a bit of a guide in terms of them turning up as well is pretty important. So just a good lesson there, sort of not to get involved in these sort of stocks there. And early in my career, I used to try and trade some of these there, and just kind of fraught with danger, and you got to be quick. And here's more losers and winners in there. So I think if you trade the stocks of relative strengths, as stocks that have been trending up for a while, that at least got a bit of a base there, but 3 or 4 higher lows in place. I think lot to be said for that.
Yeah, well, it's as you load up the last request, find the FND. I'll put on screen, see if it shows up. There's the stage cycle that Stan Weinstein that you're talking about. Stage 1's down there in the bottom bit. You don't really want to be capital deployed in there when you can have other companies that are doing stage 2 and turning that over throughout the year, getting a better return. So FND, what's FND teaching us?
Yeah, look, you could argue there's a big VCP in there, but we still have a strong downtrend there, Chris, as well. So that's had that great run there previous year. And that was one of the stocks that we covered in that model book there. Because I mean, that was a cracking, look at that. Have a breakout there, then the whole thing tightens up in here and comes out of a big VCP. And that was a cracking sign there, $120 to $8. I mean, that's what, 4 or 5 times your money there. So quick period of time there. It's within a year and a quarter. So but now we're trending down here. Again, this is what McLaren talks about there, is that once you get that overbalance of the trend, the biggest correction of the whole move, then the trend's now in danger. So you can go back, you either go back and make a lower high, or you can't even go back and retest the high sometimes, but then you normally go through corrected phase. So always be wary of stocks that have had the biggest correction of the entire move, because that's, that can often be an overbalance of the trend. And then, you'll often see even the best stocks, which can maybe go back into uptrends there, they will go sideways for a period of time. So they'll have what they call a correction in time, might use a whole, use up a year or 2 or even longer there going through those phases there. So, I mean, we highlighted these consolidations there, which, last year they were sort of taking some of those big 100, 200% stocks there. They were consolidating for 3, 5, 7, 11 months sometimes, those consolidations before they popped out of it. So after these big moves there, you get these correction patterns which can last sort of same amount of time here as well. So this one here, we're still in a bit of a downtrend here, lower highs there. So still some risk there with that one. And there's a bit of volume in here, but again, there'll be a lot of losers up here. So that's the problem with those sort of overhead there. But I don't know if we got time for Stan's don'ts, or we
Stan's don'ts. I think we should. But it's a good book, and I was going to ask you about springs, but I think Stan's don'ts is a better lesson for us.
Yeah,
we've both got the book in front of.
It's a short list there. Basically, Stan's got a list of sort of things you don't do. If you thoroughly learn it and make sure to never violate any of these rules in the future, you are going to find your experiences in the market much more fun and much more profitable. Don't buy when the overall market trend is bearish. Don't buy a stock in a negative group. Heed that one again. Don't buy a stock below its 30-week moving average. don't buy stock that has a declining 30-week moving average as well, even if the stock is above the MA. So that basically means if your MA is still pointing down, don't sort of trade at that. No matter how bullish the stock is, don't buy it too late in advance. So obviously we've been running up pretty high. We don't want to be coming in too late. Don't buy stock that has poor volume characteristics on the breakout. If you bought it because you had a buy, stop, order in, sell it quickly. So, if we do have those sort of setups, the VCPs or covered handles there, and then we break out there and the volume doesn't come in and go with it, it's probably not going to have the legs. And so it said, Stan basically saying, take it off. Oftentimes what will happen, sometimes those crisps they'll pull back there. They might mess around again, and maybe they might go through a bit more of a sideways burn, and then maybe they'll break through later on. Don't buy a stock showing poor relative strength, which is, if you've been following this channel here, that's something we avoid. Don't buy a stock that has a heavy nearby overhead resistance. So if you are, it's interesting there, because if you start breaking out, then it's if you're near an old high here, you got to be pretty careful there. Don't guess a bottom. What looks like a bargain can turn out to be a very expensive stage 4 disaster. Instead, buy and breakouts above resistance. So, some good lessons in there. Page 129, that is, when I was looking for it. But definitely some crackers in there. I mean, definitely strong sector. Wait for the breakout. Stocks that are moving averages that are moving up here. I mean, geez, this it's littered with gold, really. Those dikes. So it's definitely worth having a look at that book as well. It's funny, the longer you're in the market, Chris, the more that book, I get the truth. Yeah, the more truth it lays, the more it's the more convincing that all those theories are. It's just so true. It's just I'm 54, so mate, if you can learn those 10 or 20 years earlier than me, then you're going to be much better off than me. Heed those truths, and you don't need to read 1,000 books as well. I think it's probably around about 5 or 6 books. You just read those and just read them. I really can't. I mean, there's a reason why there's the classics out. I made the mistake of trying to read too much because I had a massive library. I read every theory there was. I read about sunspots, and I read every gamble there was. Yeah, I mean, all sorts of theories. Elliott Wade, and just I mean, it's interesting. I've definitely got a broad, sort of theoretical look on the market. But if you really want to be a good trader, want to make a lot of money, you just need to read a few of the best books and read them over and over again. That's the reality.
I completely agree with that. I mean, this bookcase over my shoulder, I think it gets cropped out most of the time. There's another one right there, and it's full of trading books from bottom to top. But I'd agree, there's about 5 or 6, and this is one of them that I consistently go back to. And this one, I mean, before meeting you, reading this, he talked about the presidential cycle of 4 year, and that was the first time I'd learned about it, was reading in his book. But that's not my edge. I love hearing your research on Tuesdays about it, and it really helps me. But my edge, I could really narrow down to about 5 or 6 books. And a lot of it actually comes out of this Stan Weinstein's one, which is the don'ts. A lot of my filtering before reading Mark Benevini, a lot of my filtering came from Stan Weinstein. And then the whole sectors, which it's almost been 15 years of my life researching those thematics on the ASX, was coming out of Stan Weinstein and Jesse Livermore. So I'd agree that you don't need to read a whole lot of books, because almost anyone who's written a trading book has pretty much made a living or enough for a good life out of whatever they've put in that book. So
I mean, you've still got you've got fund managers in the US that are still subscribing to Stan Weinstein's research. So that he's been doing it for 30 years or maybe 40 years. So that tells you something. So
yeah. Well, he's a great trader, great inspiration, and he's changed my direction of research, definitely. But to that end, we'll put up on screen some more research if anyone wants to dig into that over the weekend, and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.